Today we'll discuss India's 33 earnings per share. What is earnings per share? Basic earnings per share, profit after tax and preference dividend divided by weighted average number of shares. Bonus issue, example, net profit for 1920 is 18 lakhs. Net profit for 2021 is 60 lakhs. Number of equity shares is 20 lakhs. Bonus shares on 1st January 21, two equity shares of each for each share. Answer, bonus shares would be 20 lakhs into 2, that is 40 lakhs. EPS for 2021, 60 lakhs divided by 20 lakhs plus 40 lakhs, that is 1 per share. Adjusted EPS for 1920 would be 18 lakhs divided by 20 lakhs plus 40 lakhs, that is 0.30 per share. Since bonus shares are issued, the profits for the earliest reported period are to be recomputed. Rights issue. It has a bonus element and a price. Example, net profit for 1920 is 11 lakhs. Net profit for 2021 is 15 lakhs. Rights issue 1 share for every 5 shares outstanding at a price of rupees 15. Last date for exercise of rights is 1st June 20. Outstanding shares is 5 lakhs. Fair value of equity shares prior to exercise of rights is 21. We'll have to compute X rights fair value per share. So that is 5 lakh 5 lakh into 21 plus 1 lakh, that is 5 lakh divided by 5, 1 lakh, 1 lakh into 15 divided by 5 lakh plus 1 lakh divided by 5 lakhs plus 1 lakh, that is 20 per share. That is 20 per share. Computation of adjustment factor fair value divided by X rights price. Fair value price is 21. 21 divided by 20, which is the X rights fair value, that is 1.05. EPS of 1920, 11 lakhs divided by 5 lakhs, that is 2.2. EPS restated for 1920, 11 lakhs divided by 5 lakh into adjustment factor 1.05, that is 2.10. EPS for 2021 would be 15 lakhs. 15 lakhs we discussed. 15 lakhs divided by 5 lakhs into 1.05 into till June it was there, till June. So April, May, into 2 divided by 12, 15 lakhs divided by 5 lakhs into 1.05 into 2 divided by 12 plus 5 lakhs plus 1 lakh, 6 lakhs into 10 divided by 12, that is 2.55. If it is partly paid up shares, they are entitled to dividend to the extent paid. Shares paid 1800, face value 10, amount 10. Uh, Shares paid 600, face value 10, amount 5, amount paid 5. 31st Jan 21. So 1800 into 12 divided by 12 plus 600 into 5 divided by 10 into 2 divided by 12. That is 1850 shares. Diluted earnings per share. Profit for basic earnings per share. Add debenture interest for dilutive shares. Add preference dividend for dilutive shares. Example, issued share capital of AG Limited consists of 1 lakh shares of rupees 10 each. Also, it has issued 1 lakh 8% compulsory convertible debentures of rupees 100 each. Net profit for the year is 100 lakhs. Basic earnings per share is 100 lakhs. Add add debenture interest 1 lakh into 100 into 1 lakh into 10, 10 each, into 8%, that is 8 lakhs. Dilutive earnings per share, numerator would be 108 lakhs. Denominator, weighted average number of shares for basic earnings per share plus weighted average number of shares for dilutive shares like bonus shares, similar to bonus shares. On 1st April 2019, A Limited has issued share capital of rupees 1 lakh, ordinary shares of face value of rupees 10 each, and 50,000 5% preference shares of rupees 100 each. Those preference shares are converted into ordinary shares in ratio of 1 is to 5 on 1st January 2020. So on 31st March, calculate the denominator for basic earnings per share and dilutive earnings per share. Basic earnings per share 1 lakh plus 50,000 into 1 1 divided by 5 into 3 divided by 12, that is 2500. Total 102500 dilutive earnings per share 1 lakh plus 50,000 into 1 divided by 5, that is 10,000, uh, that is 1 lakh 10,000, like bonus shares. So in basic earnings per share we compute the period for which the shares are held. In dilutive earnings per share we do not compute the period, we just add the amount of dilutive shares to the original number of shares. Conversion of potential ordinary shares decreases EPS or increases loss per share, then dilutive. Increases EPS or decreases loss per share, then anti-dilutive. EPS if changes from dilutive to anti-dilutive, then take dilutive EPS as final. Example: earnings net 1 1 crore, profit distributable to equity shareholders, number of equity shares outstanding 20 lakh. Average fair value of one equity shares during the year rupees 75. Potential equity shares options 1 lakh with exercise price of rupees 60. Convertible preference shares the entitled to cumulative dividend of 8 per share. Preference shares converting into two equity shares. Corporate dividend tax 10%. 12% convertible debentures of rupees 100 each 1 lakh. Debentures convertible into equity shares of rupees 4. Tax rate 30%. Answer: for options and warrants, calculate the free cost of the shares. Total number of shares, fair value minus issue price divided by fair value. Options: 1 lakh into 75, 1 lakh into 75 fair value minus exercise price. 75 minus 60 divided by fair value 75, that is 20,000. Increase the number of shares 20,000. EPS nil. Convertible preference shares 8 lakh preference shares, 8 rupees is the dividend plus 10% of uh, uh, 8 lakh into 8, that is 70 lakh 40,000. Number of equity shares 8 lakh into 2, 16 lakhs. So 70 lakh 40,000 divided by 16 lakhs 4.40. 12% convertible debentures 1 crore into 12% into 1 minus 0.30, which is a corporate dividend tax. So 84 lakhs will be the amount. And number of incremental shares 1 lakh into 4, 40 lakhs. That is 2.10. Computation of dilutive earnings per share. Equity 1 crore divided by 20 lakh 5 per share. Add options 20,000. Total 1 crore divided by 20 lakh 20,000, that is 4.95. This is dilutive. Since it has decreased, it is dilutive. Add debentures 84 lakhs plus and the number of shares 40 lakhs, 1 crore 84 lakhs, 60 lakh 20,000, 3.06. Since it is reduced from 4.95 to 3.06, it is dilutive. Total preference shares 70 lakh 40,000 plus divided by 16 lakhs, 254 for 40,000, 76 lakh 20,000. So this the earnings per share is dilutive earnings per share is this is 3.34 is anti-dilutive. Since it has increased from 3.06 to 3.34, it is anti-dilutive. Since the dilutive earnings per share has increased from 3.06 to 3.34, it has become anti-dilutive, and dilutive earnings per share is 3.06. Effects of share options. Example, net profit for the year 2021, 1 crore 20 lakhs, weighted average number of shares 5 lakhs, average fair value for 2021 is 20, options 1 lakh, exercise price of options 15, answer options 1 lakh into 20 minus 15 divided by 20 is 25,000. Profit 1 crore 20 lakhs divided by shares 5 lakh. EPS is 24. Options dilutive EPS is 1 crore 20 lakhs divided by 5 lakh 25,000, that is 22.9. It is dilutive, hence dilutive earnings per share is 22.9. Can dilutive earnings per share be higher than basic earnings per share? No, dilutive earnings per share cannot be higher than basic earnings per share. Written put options, shares into exercise price divided by market price. As it would be sold at exercise price, hence it is computed at the exercise price. A Limited has written put options of 200 shares at an exercise price of 120. Average market price is 100. Denominator for calculated diluted earnings per share is 200 into 120 exercise price divided by market price 100. That is 240. If potential equity shares were not considered in the previous year because they were anti-dilutive and are considered in the next period since they are dilutive, prior period EPS is not to be restated. An entity shall present the basic earnings per share and dilutive earnings per share even if the same is negative, that is loss per share. An entity shall present basic earnings per share and dilutive earnings per share from discontinued business. For the purpose of calculating EPS in consolidated financial statements, P&L is reduced with the share of NCI. Exchange differences that are debited to FCTR account in accordance with Ind AS are not reduced from P&L of continued operations to calculate EPS. Treasury shares which are bought back are not considered in the number of shares for the computation of basic earnings per share. This brings us to the end of the session. Please do like, subscribe the channel. Thank you so much.